All right, hey guys, good morning. It is Tuesday morning, the 31st at 8:45. I apologize we didn't get a video out yesterday, um, but let's take a look at exactly what's happening. In front of you is the chart of soy meal. After showing some topping action here, obviously yesterday we broke out to new highs on soybean meal. That has caused a lot of strength in the soybean market, and so everything's being led by this. And sometimes when a market doesn't make any sense, which to us it really doesn't, this move is counterintuitive, but it is what it is. And so what you got to do is you got to look at what the signals are telling you. And so what we said on this peak is that look at this divergence that's happening between the oscillators down at the bottom. Okay, the same applies here. It's a new peak and yet another lower low. So now you have a tripled bearish divergence, which is even more pronounced than the first. And if you look at old crop soybeans, they have yet to break out to a new high. Now this morning, let me take this down to a 60-minute time frame for you. You can see that it's just all over the place. If you zoom in on it, this is the 8:30 bar. The last 15 minutes, it's traded 15:33 down to 15:25. It's just bouncing all over the place in here, and so it's tempting to say, hey, we've got to be more active and we've got to trade it. Well, let's take a step back. Instead of looking shorter term, let's look longer term and try to understand what's really happening here. If you look longer term, and let's look at the new crop contracts, new crop looks much weaker than anything else. And remember, this is what the market is discounting for the future, right? This is new crop. This is entangled in here is acreage. It's future demand. It's the crop size in South America. And here it's dealing with old crop and the crop size in South America, and really the bridge between here and here, okay? So how much is a bushel of soybeans worth in the next 30 days, in 60 days, versus how much is it worth in 9 months? And you can see a huge difference. So the market is discounting and bridging old crop to new crop. And so a lot of the analysts, and if you read Twitter and kind of pay attention to the noise, you'll hear, oh my gosh, the export inspections are insanely good. All that's true. And so they're arguing that this value is too low, that we need to push it all back higher. But that's really not what the charts are telling us. So if you think of things with me logically here for just a minute, if soybean meal was driven higher because of the drought in Argentina and a redistribution of supply, right? Then rain in a large South American crop will cure that problem. So therefore, this issue is short term, and that's supported by the fact that we have bearish divergences. Then you look to new crop and you realize, hey, we have 170 million bushels coming from South America, right? Or actually more, so closer to 190. You have 40 coming from Argentina, and you have between 150 and 158 million in Brazil. So you have somewhere around 180 to 190 million bushels of soybeans coming to market. And so that's why this market is so weak, because it could roll over and really get ugly. So I think what's happening is really more bearish longer term than it is bullish shorter term. And so even this move here, even if we break up higher, I don't think we want to chase it with this crop size that's coming, because what you want to do is just prepare to start selling the May and July contracts, because if this doesn't roll over here and it does break to a new high, you can't avoid the 190 million bushels coming to market in South America. That's way more that's way more supply than the market has need for today. And so something's going to have to radically change on the supply front in order for this to turn bullish longer term. So I think the strength that we're seeing is actually going to end up hurting more than it's going to end up helping longer term. Now let's look at the corn market. corn it's trying to get back positive here today. It just keeps getting sold under the 690 level, which is the level we've been talking about for quite some time. There's some arguments that, hey, exports are going to pick up for us here in the next few weeks or months, coming from South America, because like beans, we have to bridge supply to the safrinha crop in South America. Maybe that's true, maybe it isn't. With as bullish as the report was on this day, the fact that we're not higher speaks volumes, and I think it continuously needs to be sold below the 692 level. I know that's super aggressive and not what anybody wants to hear, but I think like beans, it's much weaker than you make out, and you can look at that by looking at the new crop. Old crop in reference is trading up here. It's trading right below this peak that we set back in October. So old crop and new crop have completely diverged, and something's got to give here. And I think old crop is being supported by the fact that new crop is being supported by the fact that beans haven't rolled over and died yet, but it can't really muster a lot of strength, because with natural gas collapsing and with fertilizer prices coming down, the margin on corn is getting pretty good. And so it's harder for it. It doesn't need to go higher to buy acres, because let's face it, all of you guys love to grow corn. And that's as true in Kansas as it is in Iowa, as it is in Illinois. So, corn's going to get its acreage. And as long as that margin is still intact, I don't see corn needing to go much higher to get acreage. Now, maybe it won't fall out of bed, but if beans break, it's going to have a hard time not doing it. And so I think longer term, it still pays to be short. And so what does it take to change our mind? Well, for sure, we're coming out of short positions in corn at 692, for sure. Will we turn around and buy it and take a long one? I don't think we will. I think we'll just be patient and wait, because there's some resistance right here at 705. There's resistance at 712. There's resistance all the way up here. So that's just really not the risk reward that you're looking at, or that you're looking for in a long position. And the fundamentals don't really exist to catapult it all that much higher in order to change that risk reward. The risk reward we want is the one we have right now, which is you have a 9 or 10 cent risk for $1 of upside, right? That's almost a 10-to-1 reward to risk setup, which is exactly what you would much rather have that than anything else, which is why we're being so patient to the downside. That, coupled with the extreme weakness in new crop contracts, tells you that any rally is going to be sold in the nearby. So I hate to be that bearish on things, but I just don't see anything that's changing our mind. Even wheat, with as short as the funds are, and with as negative as the fundamentals are, with the size of the Russian crop and the size of the Australian crop, and the acreage that we have here, with all of that stuff, I don't see how you can take a long position in wheat unless something really changes. I think this count is for lower, not higher, and anything below this 945 level has got to be viewed as continuously bearish until something changes our mind, and I just don't see that on the horizon anytime soon. So I know a lot of you were hoping that today we'd come out and say, hey, the strength from yesterday has got to be bought. Oh my gosh, it's super bullish. We're going to all-time new highs because we're out of soybeans. I don't think that that's the case, and if we are out of soybeans, it's very short term. It's not long term, because we got plenty of them coming to market in the next 30 to 60 days in South America, and I don't think there's anybody that would argue against that. So I think patience. I think the bearish side needs to be maintained, and I don't see any reason to shift or pivot from that yet. So if we learn of something, or if something hits the wire that would cause us to change our mind, we'll let you know. Otherwise, stay tuned to your texts and your emails and in our Facebook page, because we'll keep live updates going as we do move through things. I think we're getting really close to the end of this move, and so if beans roll over, I think you're going to see everything get really weak really fast. All right, that is 8:55 on January 31st. That's our thoughts after trading at the start of the week. Remember, there is risk in futures and options. If you have questions, please call us. We were happy to talk to you and help you manage through things and create positions that work for your farm. We will talk to you later today or tomorrow. Have a great night.